take this across to our guest. First, we have Akshay Bhagwat, Senior VP and GM Financial, joining us on this show. First of all, thank you, Akshay, for being a part of the show. Along with that, we have Raghavendra Kedia, founder of Prosperity Advisors, with us as well. Raghavendra, I want to take it to you first. Your overall outlook on this development which has come for the defense sector. And FY26, there are high programs which are to be in focus, and expectations of higher ordering is something that has been called about, with Bharat Electronics being there in particular focus. Want to understand your overall view. I think there is an audio issue with Raghavendra. I'll take this question with Akshay. Akshay, what's your overall take on the defense space?
Good afternoon. So yes, the defense space is looking promising, but this is more from an investment perspective. From a medium-term perspective, I think, or short-term, you should not consider this. But if you have a time horizon of minimum 6 months plus view, then on the price chart setup front, I think BDL is one of the charts which looks very promising. Although there is a small resistance at 1350, I believe overall the way the setup is, 1600 is in the making from a longer-term perspective. PEL, Bharat Electronics, that is one price setup which is one of the best setups here. From a longer term perspective, 345 to 375 can be the longer term targets one can be working with. And Mazgaon Dock is the third name from this pack, where a bottom formation is confirmed around 2200, and this price chart is setting up for an upside target of around 3300 from a longer term perspective. So these are the top three charts from the defense names which hold promise, but from a longer term investment perspective.
Okay, so that's a technical view that we are seeing for some of these defense counterparts. But Raghavendra, coming back to you, what is your take on some of these counters which are there, and overall view on defense sector?
We continue to remain bullish in the overall defense space. Again, the Make in India theme would be a big catalyst in terms of the upside movement. And this entire price correction was largely market driven, and where everything, especially the PSU stocks, were corrected heavily, because in 2022-23 they went up too fast. So there was some kind of a profit booking in terms of the price correction happening across the aviation stocks like Hindustan Aeronautics, or shipping stocks across Mazgaon, Cochin or Garden Reach, or the defense manufacturing like Bharat Electronics and so on. But we believe that this price correction gives a good entry level and an opportunity to buy at current levels. Cochin Shipyard at levels of 1450 remains our top pick, where the stock has corrected by around 50% in the last 6 months. And we believe there is a price upside significantly in the shipping names. The entire up move in the from 2020 to 2023 was led by the order wins from the Indian Navy, where we believe that going ahead, these companies, the defense companies, would get few orders, or their order book would get some boost from global orders across South America or Far East Asia, where they have sent significant proposals. So the first leg of rally was driven by orders from the Indian Defense and Navy space or Indian Air Force. But the second leg of rally and upward move could be an order book boost from global orders. This entire defense space was in a glut of around 20, 30, 40 years, and this rally would have just begun in the last 4 years. So we believe that there are more legs to this upward move, and a northward journey would continue on a slow and steady march, and defense stocks should be in your core portfolio. And Cochin Shipyard at levels of around 1450 remains our top PSU pick, remains our top defense pick.
Got the view, Raghavendra. The other stock in focus is Bharat Forge. Now, UBS has maintained the target price of about 1460 rupees per share. They have a buy on the stock, and it's after yesterday during market hours we did break the story that the cabinet committee had approved the acquisition of the ATAC system, which is the advanced towed artillery gun. It's a 155mm gun. That's the order approved by the cabinet committee is worth 7,000 crores. Now, this has been on the anvil over the last couple of years. 2 years ago, the Indian Army had approved giving the order. Post that, the cabinet committee approval was awaited, and that has taken some time, but it is finally here. Apart from that, the ATAC system, of course, is developed with the DRDO, and 65% of the components will be sourced locally. And in Q3 of FY25 conference call, Bharat Forge had mentioned that they're expecting the orders in March, and that has come through. They're also expecting some more order inflow apart from the ATAC system to come across as well. And they mentioned that it's a 3-step process. They have, the first step will be contract signing, and post that the first one-off production of the gun. And then the deliveries will start, which is in 15 to 18 months. According to UBS, they are saying that they're expecting deliveries to start by middle of FY27. So 6 to 7 more quarters to go into this, but commentary will be the key aspect for Bharat Forge in Q4. Akshay, let me come across to you first on a chart view, and then I'll go to Raghavendra. Bharat Forge's stock has seen a lot of correction over the last few months. Any view on the chart specifically for this company?
Absolutely. I think last 8 months, it's been a one-way fall from 1750 odd levels. But clearly the levels of 1000, you have seen a very strong technical reversal happening. It was highly oversold, and week on week charts, if you look at it, there has been a very strong reversal this week from levels of 1000. So really, if you look at the Fibonacci retracements from the lowest point, if I were to draw it from the highest point, a minimum 50% recovery, at least you can look forward to that, considering the kind of volumes and the delivery action which we have noted around the base levels of 1050 to 1100. So my expectations are that with a buy and hold strategy with a time horizon of around minimum 3 to 5 months with you, 1400 is the possible target you can look forward to. 1000 is the base which is setting up, and overall from a positional perspective, this stock can be bought or held on for targets of 1400 as the price charts go.
So 1400 charts. Raghavendra, a very quick view from you on Bharat Forge with this new order, 7,000 odd crores. I think 60% will be for Bharat Forge, 40% for Tata, but that's a private company. Any view on the same?
Well, if someone is holding, continue to hold. But if someone is looking to fresh entry, then they can look for levels of 1050. Valuations are slightly expensive, and any price correction at 1050 could be better entry.
That's a view for Bharat Forge that we are looking at. But let's shift focus to the cables and wire segment. They have been buzzing since yesterday after Adani Enterprises' announcement of entering the segment. Polycab, KEI and RR Cable have been trading with cuts following the move. But does that make them an attractive buy? Let's get in Varsha to understand what is HSBC making of this. Varsha, over to you.
Thank you so much. So as we all know that Adani Enterprises have entered into cables and wire segment, and according to HSBC, now Adani, being one of the largest developers in India, has a proven track record, makes a credible challenger for in this segment. HSBC sees this development as a forward integration measure for Kutch Copper Limited, as a cables and wires industries is one of the largest industry which uses copper, or rather which consumes copper in India, and the JV is likely to focus more on the cable segment within the cables and wire industry. HSBC highlights that both Ultratech as well as Adani's entry and scale up are coming in a time wherein the industry is likely at the end phase of ongoing cycle, with a significant capacity addition plans by the competitors as well. Now JV has been incorporated, and considering it will take at least 2 years to set up a greenfield plant, that competitors' earnings are unlikely to be impacted over the medium term, that is FY26 and 27. That said, HSBC says that it would have an impact on forward valuations, as the growth beyond FY27 is likely to get impacted. Given the limited disclosure on the JV's plan, HSBC has not made any changes to their valuations, and currently they have a buy rating when it comes to Polycab, RR Cable, and a hold rating on KEI Industries.
Thank you for that, Varsha. Akshay, let me come to you on some of these counters. Polycab, RR Cable, KEI Industries. Now they've taken a steep beating after even Ultratech had announced on this cables and wires. What is your view for these three?
For Polycab and KEI Industries, both of them still continue to look weak on the short-term trading perspective. So there has been a lot of selling pressure lately post the developments we have seen last week. And technically, at least, there is no evidence that possibly a short-term bottom is around the corner. So ideally, if you were to look at KEI Industries, the weekly 200-day moving average somewhere is around 2600. So that is one potential bottom you can preempt, where there can be some demand action in the stock at the lower end. If you were to look at Polycab Industries, I think Polycab also is trading in a negative zone, and the 200-day weekly moving average somewhere works out around 4,400. So yes, some more pain to go. The levels which I gave, those are potential supports we am preempting based on the moving average theory. There you can anticipate some bit of a relief rally kind of a scenario in the stocks.
So some relief rally around 4,400 for Polycab, but more pain to go. The other stock in focus is Hero MotoCorp. Now the company has acquired a significant stake in Euler Motors. Now that's an electric three-wheeler maker specifically, and the company has mentioned that they will be taking a 32.5% stake. But what does Euler Motor do? It's an electric three-wheeler maker, generally makes small commercial vehicles of 2 to 3.5 tons, and the company is having already a presence of about in 30 Indian cities. They did report about a revenue of 172 crores in FY24, and this has grown from 49 crores in the previous year of FY23. So it's already an established business. They already have a product in the market as well. What's interesting is that currently Hero will invest 525 crores, take a 32.5% stake in the company. But this 525 crores also involves any kind of secondary sale that might happen between transaction for Hero MotoCorp. So it could essentially become a majority shareholder going forward as well. And finally, the company is also present in electric four-wheeler makers. They've just launched a product at the 9 to 12 lakh range. So the total addressable market would also increase going forward. Raghvendra, how do you take this acquisition of Hero? Because Hero is currently one of the cheapest stocks in terms of the two-wheeler space, and a new product and a new market. What's your view?
This buy from Hero MotoCorp, we take it as positively. First, the Hero MotoCorp is almost debt-free, so that would not impact the balance sheet in any way. Plus, they are a foray and more deeper foray into three-wheeler category in terms of the electric EV space is a positive. Well, in terms of the price, the stock Hero MotoCorp has corrected by 40% from levels of 6,000 to levels of 3,700. They have a very steady earning per share EPS of around 60 rupees per quarter, so around 250 rupees on a full year basis. We give a moderate P multiple of 18 times and come to a moderate target of around 4,300 from current levels, which actually, as you said, it is cheaply valued in the two-wheeler space. So there is a valuation catch-up to happen for a price target of 4,300. So this price correction from 6,000 to 3,700 is an entry opportunity, and a fresh buy could be made for a 18 to 20% upside in this large cap two-wheeler space at current levels. And we take this current acquisition as a net positive and an upside catalyst.
View on Hero MotoCorp is what we are seeing. Another stock which is buzzing is United Spirits, and this is after Citi upgraded the stock to buy with a target price of 1,650. Mahima will join us with more details from the report.
So they've turned bullish now on United Spirits, and they've given a couple of reasons as to why they feel that United Spirits is poised for a good growth. First one being that there's continued near-term growth trends that have been seen in prestige and above category for the counter. The scale-up in Andhra Pradesh for the next 3 or more quarters is something that they're bullish on. There are policy tailwinds in Uttar Pradesh because of lower working capital and increased outlet reach. The fourth one being premiumization opportunity in spirits is still intact. And fifth one being that initiatives around productivity and revenue growth are being done, and management is kind of taking initiatives to offset commodity cost pressures overall. What they expect is they expect revenue to likely to grow in double digits, which will be led by structural drivers that could include rising disposable incomes, favorable demographics, as well as a shift in consumption patterns. And lastly, they think that potential easing of regulations in Delhi could also further aid growth for United Spirits. So these are the couple of reasons as to why Citi has turned bullish on United Spirits.
Okay, well, thanks for those details, Mahima. Akshay, your view on United Spirits?
Well, United Spirits, from a longer term perspective, yes, it's a buy and a hold based on the chart readings. Technically, there has been some corrective action. And, at this point, if you were to take a fresh buy position, the risk reward really doesn't justify, because the support somewhere is around 1250. So ideally, a small dip around 1350 would make it a proper buy for a fresh entrant, considering the risk reward profile. But overall, from a 5 to 6 month holding perspective, there are bright chances that levels of 1600 to 1650 may be in the making.
Got that view, Akshay. Another stock in focus is Vari Energies after Nuvama has initiated a rating on the stock with a target price of 2,805 rupees per share. So, Mika, what are some of the key aspects of this particular report?
So it's a buy rating, target price at 2,805 rupees, which offers a 26% upside to the previous close. Due to be noted that Vari Energies has not done very well since its listing. However, Nuvama states that the company is not only a solar manufacturing company, and it's strategically pivoted across a multi-decadal renewable energy as well as green hydrogen opportunity. They expect their revenue EBITDA CAGR of 30% to 54% over FY24 and FY27. And the company is expanding capacity as well as realizations will help the financial performance. They've also noted that the upcoming cell plant, which is due for commission in the next year, will add around 2,000 crores to the top line. And while margins are expected to moderate in the medium term as more capacities come on stream in India, the company's integration across different segments of the green energy theme will help de-risk that. And while the company does demand high valuations of 24 times its FY25 EV to EBITDA multiple, this valuation does factor explosive growth, and because the company is in a early stage high growth industry life cycle, Nuvama believes that it calls for an even higher valuation on the counter.
Well, thanks for that, Mika. Raghavendra, Vari Energy is a very recent listing, and the prices have been volatile, but it's operating in a very upcoming segment. Any kind of view that you have on the stock?
Puneet, if you see the last 6 months and the broader correction in the market, it was the theme which was driving this overall negativity was the froth in terms of valuation, where even good stocks or moderately priced stocks, but trading at P multiples of 70, 80 or 100 plus, were the first ones to go for significant corrections. And Vari Energies was no exception to this significant price correction. Even at levels of 2,300, the P multiple looks at around, seems to be at around 75 times of their EPS, which is very expensive. So we believe that there is more froth to be currently present in Vari Energies, and a price correction to levels of 2,000 or 1,900 possible, which is where we would review the stock again. But on valuation metrics, it looks expensive, and we would avoid Vari Energies even at current levels.
Avoid rating for Vari Energies is what we are saying. But let's talk about the rupee for a bit. The rupee has been on an up move and appreciating for the 8th day in a row. What's causing this? Vishwanath Nair joins in with more details.
Right, Anushi. So there's been a 30 paisa up move on the rupee. Thursday close was 86.3738, and now it's trading about 86.7. Important simply because there's likely a year-end sort of move that is happening in the rupee. A lot of companies, a lot of corporates and exporters especially start to pull back their dollar holdings in other jurisdictions and bringing it back to India. So for that, they'll have to sell dollars and bring that rupee back. And this is primarily done because year-end you need a lot of funds, you need to pay taxes, you need to pay other dues. And that's primarily why a lot of this is happening, because if you look at where the dollar index is, the dollar index has actually gained 0.3% against most major currencies. So the dollar is not weakening as such. So this is largely being driven by the domestic markets. The expectation is that the rupee may hit even 85.50 before the year ends on the 31st of March. But of course, after that, the reality will set in, and then we'll see maybe a little bit more balance in the markets.
Got that, Vishi. Thanks so much for bringing us that perspective in. But Raghavendra as well as Akshay, thanks so much for joining in with all your views. We look forward to our next conversation, but thank you for all those kind of views across the stocks. But with that, viewers, it's a wrap on this edition of Profit Buzzers. Stay tuned to NDTV Profit for more.